Hello, Michael Lapede here to give you some tips on incorporating. If you're considering incorporating, these are some good tips and some information for you. First of all, if you're looking as to when do I incorporate? Well, there's two factors. Number one, you're going to have liability. If there's any liability protecting that, potentially from what you're doing, you might want to separate it into a corporation period. Now, the other thing is tax. And once you're making, 35, 40,000, you might want to consider sitting down with a professional and talking about incorporating because there may be benefits. And I say maybe, you want to talk about it, okay? Now, if it's not your sole source of income, let's say you have a job, but you're making extra income on the side, but your job is making you a lot of income, you're high tax bracket, most likely you're going to want to incorporate because you're paying, 10, 11, 12% tax in the corporation, where over here you're paying 40. So you don't want your extra sole proprietor income, business income to go above that and pay 40% on it or whatever. You would rather pay the low corporate rate. So there may be times where you incorporate before you're making 35, 40, 45, 50,000 if it's separate from another source of income like a job, okay? Now remember that the key benefits to incorporating when you're looking at it is that you are going to have excess cash flow is what you're looking for because you're paying lower tax inside the corporation. So for example, if you're making enough money that you don't need to pull it all out and you can leave something in there, you're immediately saving tax. And there's immediately a benefit potentially to incorporating because you're going to save some by leaving some money in there, obviously. Now, it's still your money. You're still in control. You can, pull it out later, whatever it is, but there's some benefits. Now, another thing is you may be able to income split. Now, there's some rules around this, of course, but there may be opportunities to income split when you incorporate. So, something to consider as a benefit of incorporation. And then, as I mentioned earlier, one of the key benefits of incorporation is limited liability. You're limiting your liability by incorporating and doing the work or the business through the corporation. Now remember, if a person's married, I've said this before in another video, if a person's married, you should always consider having both spouses on the share register, both spouses owning shares, because that could give you options for income splitting for the future, or if you sell the company, splitting the capital gains, which you have an exemption for in most cases. Now in the case of more than one shareholder, of partners, say these are actual partners, you may want to look at having even class shares to evenly distribute profits, or you may want to put something in your shareholders agreement or something that says, hey, this is how the profits are going to be split, because the difference is that when you do shares, if you have different share classes, you can split different amounts of income, but if you have the same share classes, the income is split equally. So if you're with your spouse, you're going to want different share classes. You can split it however you want, but if you're with equal partners, you may want the same shares so you each get the same amount of profits, okay? When you're partnering with anybody, though, other than your spouse, you should always have that shareholders agreement. A unanimous shareholders agreement should always, always, always be in place when you have partners, other than if it's just your spouse, like I said. And directors are the ones that assume the liability. So this is my final tip on incorporation. Remember that shareholders don't take any liability. They just own the shares in the company. The director really doesn't have that much benefit, calls all the shots, that's the benefit really, and takes all the liability. So keep in mind who has the liability is the director, so be careful who the director is and make sure you're not putting a number of directors that don't need to be on there taking liability. If you have any questions, please let us know. Post in the comments below. Thanks for being a part of our business tips, and we'll see you in the next video.